everybody. Welcome to today's episode of the Daily Dose. Today is Friday, December 2nd. Hope everybody had a good end to the week. We had the jobs report come out today. It was hotter than expected, and markets were mostly flat today. So let's get into it. Looks like U.S. stocks closed mixed after stumbling between small gains and losses Friday, as stronger than expected jobs data had investors recalibrate expectations around when the Federal Reserve will pause its rate hiking campaign. The Labor Department's monthly jobs report for November showed payrolls grew by 263,000, and that was higher than estimated, while unemployment held at 3.7%. Bloomberg expected a print of 200,000 for the month, so pretty sizable beat. It looks like it beat by over 25%. So the S&P 500 was down just 0.1% today. The Dow was up by the same amount, and the Nasdaq was down by 0.2. Another strong jobs report and high wage growth confirms that the Fed's job isn't complete yet. And that was from Lazard Asset Management head of U.S. equity, Ron Temple. He also said investors need to reassess their optimism regarding the end of policy tightening, both the level of terminal rates and how long the Fed keeps rates there. So kind of hinting at that maybe we're going to go higher than the 5% target, and that it might be there longer than some investors suspect. Powell said numerous times that he doesn't want to make the same mistakes as they did in the 70s, where they loosened policy too fast and then inflation came back. They really want to squander out inflation altogether. And I think that that's really important. I think that this economy, I think that the people, the working class, and just companies that make up our markets, I don't think we can afford for inflation to stay higher for longer or to come back and exceed what it was before. Because there's a lot of people, a lot of businesses hurting out there right now. And I think that is the most important thing for the Fed to do. So we'll see if they actually follow through with that. High jobs or a higher than expected jobs report just kind of signals that the Fed isn't necessarily worried about the effects of their hikes just yet, and that they can still stay aggressive because unemployment isn't really rising as fast as maybe some people expected. So let's look at the S&P 500. Really interesting price action on the charts the last couple of days. We're kind of sitting in between the 200 moving average and the trend line right now, which is really interesting. I just don't really see how we break through the trend line right now, especially with the VIX below 20. All of the other times it's done that in this market has preceded a really aggressive sell-off. And so I think that the odds are that it probably will go down from here. I think that the odds are more heavily skewed towards another leg down, at least to around the lows that we were at before. And I think that would be a safe bet for investors. I think the FOMO is kind of really high right now, and that usually doesn't bode well for short term in the stock market. And I want to take a look at Bitcoin really quick too. So Bitcoin kind of flat since it dropped through our range. It's just around 17,000 at the time of this recording. Obviously, we still have our eyes set on the 12,000, but I think that it's going to take the next leg down in the stock market for that to happen. I think with all the FOMO in the market, I think that carries over to Bitcoin here as well. And if you look at the volume on the bottom of the chart, if you're watching on YouTube, the volume is really low. And if you're looking for a rally in this market, you really want to see the volume a lot higher than where it's at. So not a lot of big money believing that Bitcoin will be rising soon. So that's quite interesting. But I'm going to leave it here. shorter video for the end of the week. Hope everyone had a great Friday and a great week. I do appreciate everybody watching and listening. Thank you, and I will see you in the next one.